Ladies and gentlemen, the S&P 500 just broke 6,000 points, and to me, it's just history repeating all over again. So, which part of history is repeating? Let me analyze it for you, and you judge for yourself. As usual, these are my disclaimers, and let's go. So, the S&P 500 has went past 6,000 points, and it's a remarkable achievement for the S&P 500. And it's clear that it is not an overall market rise, but again, it is caused by mainly the Magnificent Seven rise that's breaking through new highs, causing the overall index to go up. The equal weighted S&P 500 still trails behind the market weighted S&P 500. So the S&P 500 has reached 6,021 points at closing, while the S&P 500 equal weighted, that means all the stocks are equally weighted instead of market cap weighted, is still trailing behind with a negative. Well, it is a general rise across the board, but this time around, really Magnificent Seven is causing the entire rise. Surprisingly, the whole market went up not because of fundamentals, but because Donald Trump has picked lesson for Treasury Secretary. So business leaders are saying that they are relieved that Donald Trump has made a good choice, a safe choice for the Treasury Secretary. Treasury Secretary will be the equivalent of a Minister of Finance. He has a history to be a global investor that worked with many legendary money managers. So he understands financial market and supports the financial market. So he's reasonable and pragmatic, according to the founder and president of Yale Chief Executive Institute. So Jamie Dimon, CEO of JP Morgan Chase, also thinks that this is a great choice, and the whole market is celebrating it by betting that the stocks will rise. So I've mentioned at the start that the entire stock market rise seems to be history repeating again. So this is the history. Now, I've used this chart for almost 2 years since the crash of 2022. If you allow me to repeat again, during the crash of 2022, I've mentioned to everybody that the inflation crash is very similar to the 1980s great inflation. And Paul Volcker, then the Federal Reserve of 1980s, increased the interest rate phenomenally, more than double what the current interest rate is right now. And the whole stock market and crashed because of the phenomenal rise in interest rate. But the crash was soon repeated by a phenomenal rise because inflation came down significantly. As a result, the whole stock market recovered very fast. If you were to take a look at the rise, the rise was very fast and not far away from what we are seeing right now. From the bottom here, it's about 100 points, and subsequent bull run reached a high of about 172 points. I don't exactly know the time period here, but this rise was in trajectory very similar to what we are seeing right now. For myself, during the crash of 2022, somewhere around June, July, that period, I have went in very, very heavily because I saw that the market was turning around by following my belief in history being repeating again. And it did. And lo and behold, the stock market didn't just recover, but it repeated a phenomenal bull run like what we are seeing right now. And the Federal Reserve has not even done with their interest rate cut. They are already lining up more interest rate cut for next year, barring any inflationary pressure that can come from anywhere. Everybody is afraid of Donald Trump imposing tariffs and jacking up prices of goods. But barring those kind of threat, I think the interest rate cuts will continue to be very, very positive for the stock market. And don't forget, there are still trillions of dollars sitting on the money market. And once the interest rate fall, these people will be very disappointed with the returns in the money market. And this eventually will have to move somewhere. Quite a significant part of it will go to the equities market. So I believe for myself that the bull run will continue with a lot of volatility and potentially a lot of risk, because right now the market is at an all-time high. So I cannot say with certainty that history will exactly repeat again. The bull run of 1981 continued for 6 years. I certainly hope it would, but basically from 1981 at its low, it went up to 6 years to 1987 before it crashed again during the Black Monday of 1987. But if history were to repeat again, then it will be a phenomenal rise going forward. If I were to look at the 1980s bull run, From 1981, it was about 122 points. Now, that was the S&P 500 then. It rose about double in 6 years. And I've also taken a look at it during the crash of 2022. The S&P 500 was about 3,600 points. Now is already at 6,000 points. So once it hit 7,200 points, you have been doubled. And a lot of analysts are already saying 2025, potentially we will arrive there. I don't know with certainty whether we'll reach there, but the outlook certainly look a bit rosy. And I certainly would believe that the outlook is potentially more positive than negative. So to be a good investor, we have to take a look at history. Now, a lot of people say that whatever happened in the past will not repeat again. A famous poet called Mark Twain actually said this: history does not repeat itself, but it often rhymes. And it's very important for us to understand the history of stock market and the financial market and economics. Take a look at all this history and see whether the current market rhymes with any of this in certain resemblance. The identification of the 2022 economic environment with 1980s economic environment has certainly helped me made a lot of money. And I think it's important for us to study the history of financial market very well. All said and done, let me repeat again. A stock market crash will eventually come. For sure, 100%. It's just that I don't know when. It could be tomorrow, it could be a few months later, or a few years later. And it's a very dangerous time for me to think about, throwing money in the market and putting new money in the market because, we are reaching all-time high. Now, someone would say that, of course, if I put money in market right now, eventually it'll crash, but you rise back again. That is true if history were to repeat again. But I would just say that, I've ever since 2022, I've not invested anymore. I've did some rebalancing here and there, but I've not invested anymore. I'm just a big crash buyer. And once I buy during crashes, I just stay back and just watch the market rise and wait for the next crash to come. So that's just me. Meanwhile, I believe in rebalancing and regular rebalancing to ensure that I don't get overweighted on stocks. So if the crash do come, the rebalancing will be to my favor. And congratulations to all that have made a lot of money. For those who have not made money because you stay out of the market, learn from this experience. And for those people who believe in crash buying or are convinced in crash buying like myself, another crash will come for sure. We just don't know when. A fortune awaits those who are patient. So, I'm just patiently waiting for the next round to come. And when it do come, maybe tomorrow, maybe in a few months, maybe in a few years, but when it eventually come, I'm ready to fire a lot of shots. So thank you for watching, and I'll see you in a day or two. Bye-bye.